All right, let's bring in senior markets correspondent Kevin Green, help set up the action today. KG, good to see you amid this holiday shortened week, which was even shorter for me. But I'm back. All right, so you had a big rally yesterday. Seems like there were a couple different catalysts. One, it seems like part of that was the EU news, but I was surprised to see the consumer confidence numbers. How would you characterize yesterday's session?
Yeah, yesterday's session, you pretty much saw the stars really kind of align here. When you're looking at consumer confidence, obviously, it came in a lot better than the street's expectations. And what actually made that very interesting, and probably why we saw a little bit more enthusiasm, if you actually look at the report, half of the respondents actually completed the survey before the reversal of tariff policy just in general here. So it was already very strong, and I think the market's already kind of pricing in that this probably could have been a little bit stronger if we had the full population actually respond after the tariff reversal and the pullback that we've seen, especially when it comes to China tariffs. So I think that was one catalyst that moved us higher here. Also, if you're looking at housing prices, we are seeing a deceleration there, and that is also going to fuel into the whole inflationary narrative, especially on the long terms. That was also a positive. And then you also saw consumable durable good orders and things of that nature actually coming in better than expected. So from the economic data standpoint, we actually did see a fair amount of strength. We also had a 2-year auction yesterday was actually very, very strong, kind of bucking the trend of the concerns that we saw last week with the 20-year bond auction. And so if we continue to see that strength when it comes to U.S. Treasury debt, that also can maybe ease some of the tensions when it comes to yields. And then the optimism when it comes to delaying some of these tariffs on the EU and that a deal could potentially be done, at least by that July deadline here. So once again, you had a lot of factors that were positive that actually fueled that rally yesterday. Had over around 90% of stocks in the S&P 500 moving to the upside here. The option side also saw some bearish flows. So you did see a really strong catalyst. You talked about maybe seeing a little bit of a consolidation today. That could be the case. We do not have that much on the economic calendar to really sway us one way or another. But we do have Nvidia earnings after the close, and so all eyes will be on the semiconductor space. We did see a very strong showing for not only just Nvidia, but semiconductors as a whole yesterday. And if we do see better than expected earnings and guidance, that could be another thing that fuels us a little bit higher and try to recapture that 6,000 level on the S&P 500, which we did reject about a week ago.
Let me ask you this before we dive into the kind of setup and expectations for Nvidia. Is your expectation for today we're pretty much going to be range bound when it comes to the S&P 500?
Well, that's actually a really pretty decent question. I mean, as of right now, if you're looking at the price action, you could make that case, maybe a digestion period, but we'll see what actually happens as the market opens. Usually once we have, an hour to 2 hours going into the close, you'll start seeing the positioning for the semiconductor space as a whole. How does the market really try to view or anticipate some of the Nvidia earnings? And that could also move prices either to the upside or downside. And so I will say that I don't think we're out of the woods yet. I think we still have some news catalysts that could also fuel us higher here, as well as obviously we've been really trading on news flow for the last 2 to 3 weeks here. And so for now, we are seeing some consolidation, but it doesn't mean that we're going to end the day that way. I think we still have a long way to go here. The economic calendar probably isn't going to give us anything that's going to push us aggressively higher. I think the biggest thing that we have on the calendar today is going to be the Richmond Fed survey, which isn't really a market mover and it's very volatile in itself. So outside of news catalysts here, I think we're just going to get prepared for Nvidia earnings. And it may not be so much Nvidia that gets the positive flows. Look at companies like Micron. So a lot of call activity on Micron yesterday. Some of these complementary businesses or those that have exposure to the AI space may actually get a little bit more bullish enthusiasm rather than Nvidia itself, which has not been really a decent mover after earnings. And in fact, we've actually seen pullbacks from Nvidia. But there have been other companies that have been able to capitalize on some of the commentary coming from their earnings release as well as the conference call.
So let's talk a little bit more about the expectations for Nvidia today. Number one, what are we expecting in terms of its trailing quarter and, say different segments? And then the second question, you make a great point that in recent quarters, Nvidia tends to sell off even if they beat. But also, given the setup, would we probably already know if they were going to disappoint on earnings?
Yeah, I would say it kind of depends. I mean, we've seen them, report early or at least file that they have to take certain write-downs because of export restrictions
Right.
to China. So they've gotten ahead of the ball or ahead of the curve there. So that's one thing to be mindful of. I think when you're kind of looking at the street's expectations just in general, you are expecting a beat both on the top and bottom line. The big question mark is going to be the guidance moving forward and what their write-down guidance and how that's going to actually impact revenue. And I can tell you that analysts are actually a little bit cautious when it comes to the guidance moving forward. So we may actually have lower expectations on their guidance beat than what we've had in the past. That might already be priced in. Obviously, that's going to be the big question mark. So I don't think we should be very surprised if you do see maybe a little bit more of a deceleration in revenue growth because of the China exposure. If you look at China, it's around 13% of their overall revenue mix. We know the H20s are having some issues being shipped over there. They have taken already some write-downs there, and they're trying to bring a new product to the market in order to try to backfill that H20 demand because they can't really sell those H20s anywhere else for right now. Here's the curveball. Blackwell ramp is going to be also on the mind of a lot of traders and investors. And we're probably not going to get that a lot of clarity on the earnings release itself. Is going to be on the conference call. And what the market really wants to see is that production is ramping up on schedule and that demand in orders for the Blackwell chipset, the new one, is ramping up fairly aggressively. There's a concern about the China sales, but we also have to be mindful that the sovereign demand is also going to be ramping up. The Saudi Arabia trips that we saw last week, I believe it was last week from President Trump, as well as some of the other Middle Eastern countries, looks like they're going to have some access to Nvidia chips here. And so if they are seeing that type of ramp up, maybe that backfills the lack of sales coming from China. So there's a lot of different dynamics here. I think the conference call and investors just want to hear more confidence that demand is still growing and that they are seeing an impact when it comes to China, but maybe it's already factored into their projections. And where can we see some offsets for that demand? And once again, I think the sovereigns are probably going to be the biggest and key factor in order to try to supplement some of that loss.
Okay, let's take a look at another mover. Okta down double digits in the pre-market. What went wrong? It doesn't look that bad to me.
Yeah, so this is a situation where you have multiple factors here. One, you have the street's expectations, and then you have kind of the whisper number of what you would like to see from the company. It's not the current quarter that really scared people. It's actually a guidance moving forward. When you're looking at the adjusted earnings per share, that actually came in at 86 cents. Street was looking for 77 cents. So they beat the street's expectations there. Revenue also exceeded the street's expectations, coming in at $688 million. Street was looking for $680 million. You're looking at around 12% revenue growth on a year-over-year basis. A small deceleration, that could be a little bit of a cause for concern, but the guidance moving forward, the 2026 fiscal year revenue guidance was actually held at between 2.85 billion on the low end and 2.86 billion on the high end here. In operating income, they did increase that slightly, but not aggressively enough. And I think the street really wanted to see a beat and raise for Okta and not a beat and pretty much hold. And they did make mention on the conference call and from their executive team, as well as some of the commentary within the release, that macroeconomic factors are what is actually a big factor when it comes to actually their guidance moving forward. They're not seeing any type of material slowing yet when it comes to their customers, but they're hearing it from their customers that there might be a little bit of a slowing of the sales cycle in general, which is why they're taking a cautious tone. And another reason why we're seeing a pullback to the downside. Last thing that was also very key for Okta, though, if you look at the 1-year daily chart, it was nearing a really significant key area of resistance. If you're looking at it, it was trading near a 1-year high. So at the end of the day, high expectations, high valuations, maybe a weak guide compared to the street's expectations is the reasons why we're seeing a pullback here, not so much the reported quarter that we saw.
Okay, and KG, give me 30 seconds for your target to the upside and downside on the S&P 500. I know you say we may not necessarily be range bound, and I know the viewers who tune in for you would kill me if I didn't ask you this.
Yep, to the upside 59.60, to the downside 58.70. So those are going to be two areas to be focused. And just once again, the trend is still bullish in this market. You're not seeing anything fracturing quite yet, and you're probably going to need to have news flow in order to see a really significant change of direction right now.
All right, KG, thank you. That's our Kevin Green, Senior Markets Correspondent.